Okay, so let me take you to Vancouver's Olympic Village. It's a gorgeous neighborhood, right? You've got these glassy buildings, all these athletic stores, and some of the most eye-wateringly expensive housing in the entire country. But hidden right here in plain sight is a pretty fascinating economic mystery. So picture this. You have two almost identical two-bedroom apartments, literally right across the street from each other. One of them rents for $4,500 a month, okay, but the other one, it's just $1,900. That's a $2,600 difference every single month. So how on earth is that possible? Is it a typo? Some kind of secret backroom deal? Nope. The answer actually reveals a completely different way of thinking about housing itself. And the secret? Well, it all comes down to these two terms, market housing and non-market housing. The expensive apartment, that's the one we're all used to hearing about. But that much, much cheaper apartment, that's part of a system that plays by a totally different rulebook. All right, so let's crack this thing open. The main difference between these two types of housing isn't the building quality, it's not the neighborhood, it's about what they're really for. It's their fundamental purpose. This right here is the whole game. Market housing, the kind most of us live in, has one goal: make as much money as possible. The rent is set at the absolute highest price someone is willing to pay. But non-market housing, it's not trying to make anyone rich. Its goal is just to break even. The rent is calculated to cover only the actual real costs of running the building. The profit motive is just gone. So who's actually building and running these places? Well, it's a pretty diverse bunch, actually. You've got dedicated nonprofit housing groups. You've got co-ops where all the residents pitch in to manage the building. You've got charities like churches or the YMCA, and, of course, government agencies. Okay, so if it's not always getting a huge subsidy, how does it end up being so much cheaper? Well, the secret ingredient, the real magic here is time. It's all about playing the long game. So look, when a new non-market building first opens, the rents might actually be pretty close to what you'd see in a private building. You got to cover a brand new mortgage. But here's where things start to change. While market rents are skyrocketing year after year, non-market rents only go up a tiny bit, just to cover rising operating costs. That gap just gets wider and wider. And then after a few decades, boom, the mortgage is completely paid off. And that is when something truly amazing happens. And this is the end game. Get this. That number you see is the real, actual monthly rent for a two-bedroom apartment in a Vancouver co-op that was built back in the 80s. $1,000. And why is it so low? Because there's no mortgage left to pay. The rent now just covers the absolute basics, like maintenance and taxes. That's it. This is what permanently affordable housing looks like. Now, I know what you're probably thinking. This all sounds great, but it brings up a really fair point. These places have insane wait lists, right? It feels like winning the lottery. You're creating these amazing, affordable homes for a handful of lucky people, while everyone else is still stuck out there fighting in the private market. So is it really a solution to the bigger housing crisis? Well, it turns out it can be, but only if you think much, much bigger. To see how this can actually help everybody, not just a lucky few, we have to look at a city that didn't just try this out. They made it the very foundation of their entire housing system. And that city is Vienna, Austria. I mean, check this out. In Vienna, a whopping 60% of the entire population lives in non-market housing. This isn't some small niche program for low-income folks. It's the mainstream. It's for people from all walks of life, and it totally changes the dynamics of the whole city. Now, let's flip that and look at Canada. Here, non-market housing is only about 5% of all homes. It's just a tiny little sliver. And at that small scale, it's just a drop in the ocean. It has almost zero influence on the big competitive market, where 95% of us have to find a place to live. And this is the key. When you have non-market housing at the scale of Vienna, it creates something economists call a unitary housing market. Basically, it means private landlords can't just jack up rents to whatever they feel like. Why? Because they're in direct competition with this huge supply of high-quality, affordable, non-market homes. If your landlord gets too greedy, you can just move. All those nonprofit options act as a price anchor for the entire city. But let's be really clear here. This is not a silver bullet. You can't just throw money at non-market housing, dust off your hands, and say, problem solved. There are much bigger forces at play. So one of the big reasons Canada has so little non-market housing is pretty simple. For a very long time, we just stopped building it. For more than 20 years, the federal funding needed for these projects pretty much dried up completely. We're only just now, finally, starting to reinvest.
But honestly, the problem is even bigger than just funding. In a lot of our cities, it's just incredibly hard to build any kind of housing. And these non-market projects, they run into the exact same brick walls as private developers. Crazy zoning rules, years-long approval processes, and neighborhood protests. All these hurdles create a shortage of housing for everyone, period.
And this quote, wow, this quote from a real estate CEO just lays the whole conflict bare. From a purely investment point of view, a housing shortage isn't a problem to be solved, it's a feature. It's good news, because scarcity drives up prices, which, of course, drives up profits. It shows you the two completely different ways of looking at this problem. This comparison is such a critical lesson. On paper, Hong Kong looks a lot like Vienna, right? A huge chunk of their population, 46%, is in non-market housing. But, and this is a huge but, they also make it incredibly difficult to build new housing in the private market. So what happens? You get a massive shortage in the private sector, which leads to some of the highest rents on planet Earth. Vienna's success comes from having both a huge non-market sector and a healthy private market that's allowed to build. So, after all that, what's the big idea you should take away from this? The best way to think about non-market housing is as a crucial counterbalance. In a system where housing can be treated like a stock to be traded for profit, non-market housing provides a powerful stabilizing force. And it works in two really simple but incredibly powerful ways. First, it just adds more homes, period. More supply is always good. And second, by setting its prices based on real costs instead of what the market will bear, it forces private landlords to actually compete on price. In the end, this whole debate, market versus non-market, profit versus cost, it really all boils down to one big fundamental question. As we try to fix this housing crisis, we have to decide what we truly believe a home is for. Is it mainly a financial asset, an investment designed to create wealth, or is it a fundamental human need, something that should be stable and secure for everyone? The answer we choose is going to shape our cities for a long, long time to come.